Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will take a look at the New Zealand dollar. But I know that you like to get the updates on the euro currency, but don't be upset too much, because I intentionally have chosen the New Zealand dollar because it led us to take the different picture on the euro currency. Recall what was said in previous updates on the euro currency, that we were expecting possible forming the head and shoulders pattern on the 4-hour time frame chart, but if market will climb again above the right shoulder that already has been formed, that will be the warning signal, and that could become the first bell of the possible failure of the head and shoulders that we have and the raising of our short-term bearish setup that we have on the euro currency. Currently, guys, I see some signs of warning signs on the euro currency, because the action that market shows right now, it's not very typical for the bearish acceleration or bearish continuation. So I will show you. So you could treat this update as the combination of the New Zealand dollar and the euro currency. So take a look at the 4-hour time frame chart on the euro currency. Here is our pattern. You can see that top of the right shoulder has been formed. So if you have taken the short position here, you probably now has some space to move your stop to the break-even or protect the position somehow. Well, but guys, personally, I don't like this action. It's not the sign of the bearish drop, because when the head and shoulders is forming, usually this is the capitulation of the bulls, and here is where bears should start to control market, and this usually leads to the continuation. So how head and shoulders works? This is normal bullish trend, then this treated as a retracement on the forming on the head and shoulders. That's the last attempt of the bulls to return back to the bullish trend. When it fails, bears take the control and drop the market down. But what we have here, that is not the bearish control over the market. It doesn't look like real bearish continuation. I don't want to say that this pattern already has failed. It's absolutely not, because we still could get the chance that this market will continue to move lower, and and don't be hurry with the canceling of this setup. It could work, but guys, this is warning sign. This is not a good sign for bearish setup. And take a look, market has moved below the weekly pivot, right, and returned it back up. So what hazard stands with this, guys? We could get the butterfly sell pattern. So market could accelerate with this butterfly, okay, and lead market to A, B, C, top, D pattern that we have discussed here. A, B, C, bottom, D pattern. That's the hazard of this situation. And now you could ask, and what the big deal with the New Zealand dollar? Well, these currencies both stand in relation to the dollar, and on the New Zealand dollar, we have clear bullish signs that's now are forming. And as we have the bullish signs on the New Zealand dollar, well, this increase our warnings on the euro currency. That's market really could turn to some bullish action. If for example we would get the normal drop here with acceleration, I would never speak on the New Zealand dollar and any bullish setup here. But since we do not have it, and in general this action looks not quite bearish, guys, that's why we're taking a look at the New Zealand dollar. That's the first reason. Second reason is because on the New Zealand dollar we also have nicely looking bullish setup, and this is the continuation of the analysis that we have made previously. So let's take a look on the New Zealand dollar, guys. If you remember, we have traded first this retracement when we have taken long position. Market has accelerated further, and we said that nearest target on the New Zealand dollar will be A, B, C bottom, D 618 minor extension at the 69.10 area approximately. also daily overbought. After that, when the market has hit this area for some time, since we have traded the bullish brand body here, market has completed its target and we abandoned this currency pair for some time. But take a look what we have right now. It's classical action with the bullish grabbers. This market shows retracement, now is forming upward action, and here's has formed the grabber and continue move up. Also guys, take a look, that market is coiling around weekly monthly pivot resistance one, and what we see here, first reaction on the monthly pivot resistance was retracement. Now market returned back up above it. It tells us we have not just retracement within the long-term bear trend, but we have the continuation of the bullish trend, and that tells us that market probably should reach this area very soon. I'm not sure about the current week, but 3-4 sessions probably will be enough to hit this area. If we will take a look on the intraday charts, guys, of the New Zealand dollar, you will see that market is forming some sort of the channel, or here is widening this wedge pattern, but also market is forming the butterfly, and butterfly has the target 69.15 area in agreement with this target, daily target. Also guys, we have the hidden bullish divergence with the MACD indicator that has triggered this upward action. So if even you will calculate, for example, most recent ABCD pattern, you probably will get approximately the same target. That's right. So you could see this is the same target that we have on 69.15. So as you can see, overall situation on the picture on the New Zealand dollar looks really bullish, and that's put the shadow on the bearish perspective on the euro currency. That's why this is just additional risk factor that makes us to be worried about the perspective of this bearish development. So guys, if market will move above the top of the right shoulder, that will be absolutely untypical for the normal bearish market, and that will be the sign that chances on the failure of this setup will increase significantly. In this case, you could move your stop to a break-even weight when the market will hit and just do nothing, or you could try to take the aggressive position on the euro currency, for example, trying to trade the butterfly to the upside, its acceleration. Also guys, if you remember yesterday, we said that's a bit also disturbing factor, that on the gold market we have the double repo buy with the perspective of further upward action, while on the euro currency we have the bearish setup. So this contradiction is not normal, and it increases the risk and uncertainty on this currency, and it really put the hazard that this setup could fail. And recent action, why I in general have started this conversation, this discussion, mostly because of the market mechanics, because we do not see acceleration and the bearish control on the market with this action. And I think that guys, it's better probably to close the shorts on the euro currency. This is not a very good sign. So what to do after that? You could trade New Zealand dollar. You could try to trade the butterfly here to the upside. You could do nothing, just wait when the market will reach will form some other setup. So, but I just have to warn you about the risk with this bearish perspective on the euro currency. This perspective looks really doubt concerning on this possible downward action. So let's keep watching, but situation is really very thrilling on the euro currency, on the gold market. It's really very interesting.